How to trade calls and puts on Webull in 4 minutes. Today, we're walking through buying a call and a put, then how to successfully sell each of them to lock in profits or cut losses. Let's buy an example call option on Nvidia. On the options chain, the first thing you should do is click the drop down in the bottom right, then select calls. This makes navigating and reading the options chain much easier. Now, Webull has a 15-minute data delay, but you can get free real-time data by hopping onto the Webull live customer service chat and asking for it. As long as you're actively trading options on the platform, they'll give this to you. So place at least one trade, then ask. Next, choose an expiration date. We're gonna go with the May 30th, 2025, which is 35 days from now. Nvidia is currently trading at about $106 per share, but I predict it's gonna have a really good month ahead and be trading at around $130 per share. We're gonna go ahead with the 120 strike price. By scrolling to the right, Webull will display key data like the break-even price, option Greeks, implied volatility, volume, and more. Tapping on the contract, you're brought to the order form. Make sure buy is selected, and we'll leave this as a limit order. For price, let's go with mid, and this gives us a cost of $2.41 or $241 total after multiplying by 100 shares. Let's leave the number of contracts as 1, and at the bottom, you'll see the estimated order total, which is $241 for this trade, and your available buying power. Hit buy, confirm that the number of contracts and the limit price is what you want, and hit confirm to place the order. Now, let's buy a put option, which you'd use when you believe the stock price will go down. By the way, Webull's currently offering up to 20 free fractional shares of stock for signing up and depositing. The link in the description and comment section below will take you directly to that sign up page where you can earn those free shares. We're going to use Tesla stock as an example, and back on the options chain, change the display from calls to puts. Let's use the same expiration date, 35 days from now, and for the strike, let's go with 240. Scrolling to the right, the break-even price for this contract is $228.18. So by expiration, Tesla needs to be trading below this price for us to actually earn a profit. Make sure buy is selected, then under limit price, we can see that this contract costs $1,190. We'll leave the number of contracts as 1, then at the bottom, you'll see the estimated total in the form of a debit. Hit buy. Confirm that the number of contracts and the price is what you want, and hit confirm to place your order for execution. Now, both of those order walkthroughs were just examples. The market is currently closed, and to trade options, it must be open and there's no after hours trading. So let's say that we currently have that put position and call position open. But how do we quickly exit these positions to lock in profits or cut losses quickly? Let's say Nvidia's share price shot up the next day and the value of our call option went up by 50%. We can immediately secure a profit on this by heading back to the options chain, making sure calls are displayed, then choosing the same expiration and strike price. On the order form, make sure sell is selected this time, and under limit price, this is the amount you'll be receiving instead of paying when you bought the option. You'll then enter the same number of contracts you purchased, and at the bottom, you can see that the estimated total is in the form of a credit this time, meaning it's going into your account. Hit sell, make sure the number of contracts match those that you purchased, and the limit price is what you want to sell for. Hit confirm, and as soon as the trade executes, that's all you need to do. You're completely out of the position. Now for the put option, let's say the stock price moved against us and we need to exit the position quickly to limit our losses. Head back to the options chain, make sure puts are displayed, then choose the same expiration date and strike price of the put that you purchased. On the order form, make sure sell is selected, then under limit price, this is the amount you'll receive for selling the put option. Make sure the number of contracts is equivalent to the number you purchased, and at the bottom, you'll see the estimated total in the form of a credit. Hit sell, double check that the number of contracts equal the amount you purchased, and the limit price is what you want. After you hit confirm and the trade executes, you've officially exited the position and there's nothing else you need to do. Now, most people lose money buying calls and puts, but what if you could flip that around and earn premiums instead of paying them and do it with way less risk? This video here covers the lesser known strategies the wealthy use to accelerate their investments and income, and we can use them too without being rich.